Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, March 30th, 2016, and this is the Daily Report for Gold and Silver. We do have precious metals under pressure today, fairly strong pressure, a little bit more than moderate, with gold trading off about $15 to $16 on the day. It's currently trading roughly at $12.25. 1226, low 1223, so we are just off of the low on the day, the high 1244. We do have an active position that we did enter yesterday. We got in at 38, so we are under the gun by about $10, $12. On today's report, I'll talk to you about if this latest move has caused real long-term damage, what the implications are, and what we want to do with the effective trade that we have on now. So traders, as I've said, we do have gold trading lower this morning, off about $10 when we look at COMEX, $15, $16 when we look at spot. In either case, we're looking at a market that is currently trading roughly at $12.25, $12.26. We're looking at a daily chart, and there's absolutely no doubt I had really hoped for some follow-through buying today rather than selling, and we're absolutely getting selling in the market. In fact, we still have a weak U.S. dollar that's adding almost $5 in value per ounce to the price of gold, but you've got selling, strong selling in the market, constituting about a $21 plus move to the downside. When you factor in the dollar, that's where you're getting that $16 drawdown. Now, we do have a long position in the market. We're long at approximately 38, right in this area. We got in towards the close of yesterday's market activity. Now, we certainly got the pattern that we identified as a three-river morning star, and it's a variation off of that pattern because you basically have two stars gap in the center between the long red and the long green candle. However, as you know, from being with our service, we then look for confirmation, and a confirming candle could have looked like this as long as it would have been green. In other words, higher high, higher low, long green candle. We certainly didn't get that. Now, how do we make sense of this? Well, I believe that this is not due to a fundamental shift in the marketplace, meaning new data points coming in and the market reacting to that. Rather, I think we are simply seeing profits being pulled from yesterday's move. Now, with that in mind, what levels are we looking at? Well, we certainly have resistance at about 1244. We also believe that we have strong support at about 1206. Now, we have our stops just below 1217, which means that we've put it below this candle right in here. So as long as we do not make a lower low, our stop should hold. However, at the same time, I certainly would have liked to have seen this market continue on its upward move and really give us a stronger indication that in fact we have concluded our C wave. So traders, before I go ahead and pull up our very short-term chart, I kind of want to put this into perspective. Really what we're looking at is this most recent move here, in which we saw gold have a dramatic rise from about 1050 up to these tops just shy of 13. I believe that that completed a minor one. I call it a sub count. We've got a major count, that's 5. Then A, that's our major. In between the major, we get our intermediate count. That's in red. 1, 2, 3, 4, and 5. And then within our intermediate, behind that, of course, is a subcount. So, for example, this red 5 was composed of a 5 count. 1, 2, 3, 4, and 5. Now, with that in mind, we can go ahead and take a look at the shorter term chart, which I've just gone ahead and pulled up, and realize that what we were talking about with that sub count 1, even though it's in red, I have it in red because it's a different chart. What we're looking at is all of this being part and parcel of a wave 1, and that of course is a minor one, and then this part being part and parcel of a wave 2. And the way that we had it broken down is we hit this top, we had an A, we had our B, and I had thought we had really concluded our C and gone into that third wave, meaning ABC completes 2, and now we're in 3. However, with this move, there is a possibility, traders, that we're not over the hump yet. So what we're looking at is really an A, a B, and our C now would be composed of something like this and then back down. That would be the only way we could determine it, and then we would actually look for that move between 1195 and 1205, which was our original target. Realize that we entered the market because we felt that the move we saw to these lows at 1206 really signified a conclusion to that ABC progression down, and it's especially seemed clear when we had this dynamic move yesterday. However, now when we look at the most recent activity, it is not as clear. Let's see how the dust settles here. We're going to maintain our long position. We're going to maintain our current stop. If we find some kind of strong support in the market and we get the bounce back to the upside, I might even consider adding to the position. But for right now, we just want to hold steady and see if our stop holds. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow.